I think for investment in Europe, we will face another positive year. So by end of this year, 2015, we'll see a new record level coming from the investment flow into real estate into Europe, but also from the transaction volume we expect, especially in the office sector and on the residential sector in total. So this will be, generally speaking, a positive outlook for end of this year. What drives, on the other hand, the negative sentiments are let's say, the mood in the industry due to four main reasons. One is the case of called China. China's turbulences last week. Secondly, it's the issue of Russian-Ukraine conflict. Third one is the maybe Brexit activities or political issues. And the fourth one will be probably the refugee case, which is not really, measurable these days, but it could be a kind of a negative effect on the real estate market in the sentiment, but not in reality. I think the big superstar will be again residential within Europe, mainly focused on the investment centers. So between let's say Stockholm, Milan and Madrid, all these investment centers who starts development, especially on the high-end segment, will rocket again. So the prices explode the last 2 years, and this will going on for sure. The second thing is logistics sector. Coming from another level of activity, to be honest, but covering whole Europe. We see a lot of things going on in Poland, Czech Republic, but also in the northern part of Germany and in the Baltic region for sure. Third one will be the office sector. The office for sure is a little bit explainable because what drives the market is more the money flow into office rather than the rental growth expectation on that. And this is a kind of a mismatch, speaking as an analyst in these days. So a pretty good environment on one hand, but the question is for us, where do we see the growth for the next 2 years by accepting the prices today for office? I think if we make a comparison between 2007 and 2015, I think in former times it was around 215 billion investable capital in real estate. Now it's the double size, which means around 500 billion investable capital in real estate, which means double the thing. On the other hand, the transaction volume will reach the same level like in 2007, which means by the end of the day, there is a lot of money around the world looking for real estate investments. When I say a lot of money, maybe we can also say maybe too much money on that. So this is one of the main reasons why I come from a really rational standpoint that I would expect, and hopefully we can see the interest rate will rise slightly within the next 1 or 2 quarters within Europe, within globally, which means by the Fed, and then maybe followed by ECB on that. This sounds a little bit strange for the industry who has a lot of, let's say, wind and positive pressure for real estate investments on one hand, but there is too much money available in these days. And this again, where analytically speaking, I have my doubts. This will end up for the next 4 to 5 years in a really positive end. Again, some clouds are in the skies, especially driven by the money flow into real estate. The big money comes from the US and Canadian investors this year, followed by pan-European one, and then followed by Asian/Australian money into Europe, speaking in total. When you look on the, let's say, on the investment centers or countries, it's for sure first step will be all the time, it will be London. Then it was Germany, and then followed by France. And they changed their position in the ranking for the first time. So this is for sure linked to the weaker economic situation in France. So Germany is now on number 2 with a higher investment activity than Paris and in France in total. And this shows us that the money flow into the rest of continental Europe out of London will find obviously another routes on that. And this is again for me the most astonishing thing, because nobody would expect that the French economy will hit so hard the last 2 years on that. The second thing for sure is the silent but steadily growing Asian activity in London, but also in continental Europe. I think this is what we have to expect also for the next years. Asian money, which is to 75% Chinese mainland money, will make investments out of London, which is called continental Europe. And this is again where we expect more than around 1/3 of all the investments by 2020 come from, let's say, Chinese roots. And this is again where the whole industry will bring us in a new kind of a structure. Where does the money come from? So what are the reasons for that? It's, by the end of the day, diversification. So this is their main argument. By the way, they accept lower yields. This means also that the Asian impact will for sure drive the prices higher than analysts expect 2 years ago. And this is again an interesting market situation in these days.